And now to our next conversation. Nigeria faces a staggering 24 trillion naira SME credit gap. Only about 37 trillion naira is disbursed out of the 64 trillion naira needed annually, leaving countless small businesses without crucial financing support. Now we have Fintech Innovators using AI-driven credit scoring powered by alternative data, e-commerce histories, mobile money flows, utility payments to assess creditworthiness for thin file SMEs. Joining us to unpack this, we have Oluwatoyin Laoye, is a Chief Risk Officer, Vendor Credit. Great to have you on the show.
Good morning. Great to be here.
Yeah, good morning. So, you know, I like to talk to Chief Risk Officers because sometimes I like to get into your head. You know, I know you love to identify risk. You know, you look here, you say, okay, this is risky. You look this way, this is risky. Don't put your money in there. How's the risk looking for you so far?
So far, it's been a bit of good news and bad news, right? So obviously, interest rates play a big role in how we make lending decisions. So with increased interest rates, right, you need to adjust for a lot of things, right? Borrowers' appetite, you know, cash flows and all of that. On the good side, we also see that there's been an uptick in the level of business that we've seen in the marketplace. So on the good side, where you have some form of demand, on the other side, you have restraints, right, with access to liquidity because of the current interest rates environment, that high interest rate environment that we currently experience in Nigeria.
So, you know, definitely, I guess it's not the easiest thing, you know, providing need for near instant, you know, lending decisions. You know, break it down for me. What do you have to put together to make this kind of, you know, decisions to actually say, okay, this person is actually credit worthy at this point? How much information do you need?
Okay, so previously, your traditional finance institutions will look at things like audited financials. They will look at, you know, collateral, right? All of that is not available to SMEs. So what we've done is taken an alternative approach where we're looking at bank account statements, right? Bank account statements tell a story. If a small business or a business has been operating for a while, you can see inflows from their customers, right? You're also looking at fulfillment records, right? Who have they done business with? How long have they done business with that person? Utility payments, mobile money activity, right? All of that shows you a track record. And off the back of that, you can build models that are flexible, that guide your lending decisions. So unlike traditional institutions who are sort of I don't want to say inflexible, but who are sort of strict on certain criteria that they use to make lending decisions. For us, we try to utilize a whole gamut of alternative data that a lot of people would ordinarily not take into consideration, right? And then combine all of that to create a credit profile for the person. And off the back of that, we can then make a lending decision to the person.
Sometimes you imagine, you know, because AI is doing a lot of crazy things right now, and you know, you wonder if, you know, some people can actually trick AI, you know, into showing their, you know, history when it comes to e-commerce, utility, mobile money, and all of that. How do you identify, you know, to make sure that that data, the integrity of that data, how do you confirm that?
Okay, so data integrity is a big deal for fintechs. I don't know any fintech that will not tell you that the first thing that they did was data integrity. And AI doesn't work in isolation, right? So AI, you know, a lot of the things that you're seeing nowadays, machine learning tools, OCR, decision engines, they are tools that have been fed data from verifiable sources, right? So you need to have at least 5 years of data. So when we started out, we didn't have AI as our first, you know, credit model tool. We built a credit model based on our understanding of the market. And then you then need to start, you know, categorizing that data, analyzing that data, and you need like at least 5 years worth of data to then, you know, to then feed any of these AI tools, right? There are so many of them. You have some in the open source, you have some that are hosted by the cloud, and then you have some that are just commercial SAS, SWS platforms, forgive me, right? But all of this is based on verifiable data. So some of the things as you mentioned now, if you've dealt with a client for the last 5 years, you would have a track record. You would have some form of information that you can then say, oh, I've verified this customer. I have his email address. I have his utility bill. I know where he pays his bills at. I know his repayment cycle. I know who his largest customers are. You can treat that into a tool, and then that tool then assigns weights, and off the back of that weight, you can then make a lending decision. So AI is not in itself does not work in isolation. It depends on the data that is fed to it, and that data is what we've gathered from a lot of our customers over time, and then cleaned up the data to ensure that data integrity is topmost of our list.
Right, and you don't have to answer this question. Do you think AI will think Ladi Williams is credit worthy? You don't have to answer that.
Okay, I'll plead the fifth on that then.
So what fairness metrics, and audit frameworks do you have in place to detect and mitigate bias, when it comes to AI credit scores?
So like I said, right, AI in itself does not work in isolation, right? So we do what we call a bias detection, right? This sort of checks your model for disproportionate rejection rates across different segments. Like we know in Nigeria, and I'll give Nigeria, and I'll use Nigeria as obviously as our example, right? We understand there is general knowledge with verifiable data that women-led businesses do not get as much funding as they need, right? So in our situation, right, we've carved out a portion of our portfolios for lending to women-led businesses. And what you do is that once you have a bias detection tool in place on your model, it sort of checks for rejection rates across this segment. So gender, geography, sector, things like that, right? That would ensure that whatever we're doing, right, is fair. The transparency of also the algorithm we use, right? A lot of our scoring decisions can be interpreted, right? Based on assigned weights. There are policy manuals to guide all of this. So a lot actually goes into ensuring that there is no bias in your AI tools as a company, right? And then there is constant revalidation. So you bring in an independent auditor to look at also your model and your tools, right, that you're using for analysis to ensure that everything is in line with globally acceptable standards. So there's a lot of work that is done at the back end that a lot of people don't see to ensure that there is no bias when it comes to lending decisions as a whole.
And, there's that sentiment that, most of the time the big businesses and, government somehow crowd out, the smaller players, when it comes to, getting credit. In your view so far, are you seeing any improvement, with the traditional financial institutions actually, giving more to the small businesses? Are you seeing any improvement there?
So what we've seen over the last couple of years has been support from DFIs, Development Bank of Nigeria, BY, Afrexim, AFC, right? There has been a lot of focus on those areas that have generally not been included. And so they've also carved out pools of liquidity where lenders can tap into. BY has a fund that is focused on inclusion, same thing with Development Bank, who we are hoping to do some very good work with in the next couple of months, right? And so basically, because of that, we've seen a renewed thrust into providing liquidity to areas which are hitherto have been excluded from your mainstream financial, from lending, basically. So women, SMEs, farmers, agriculture as a whole, right? There's been assigned pools of liquidity that has been given to those. So you see traditional lenders who are also taking advantage of that, and then smaller players who are a lot more flexible and understand the needs of these players and can provide a lot more financing in those areas, basically.
All right, with some of the AI tools that you mentioned, is it getting easier to identify risk?
I would say to some level, yes, right? And why I took a pause was because, like I previously said, AI doesn't work in isolation. So it depends on the data that you give to it, right? And so you need to have a requisite number or appreciable data to be able to, quantify risk appropriately. Take your typical vendor, right, whose counterpart is maybe just one multinational, so he runs a concentration risk there. So if anything happens on that forefront, right, or his operations are not vital to the company, maybe he's not providing a strategic tool that the company needs to increase revenues in the year, right? You find that there's a mismatch in terms of repayments and his ability to repay. And so you need to take all of that into context, right? And then decide and make a lending decision based on these variables that you see in the marketplace. So AI in itself, like I say, it's easy to throw it around because it's become the new buzzword, or machine learning language, AI tools. We have different variants, and every big player in the market is, amping up to supply the next big AI tool. But in itself, it cannot work in isolation. It still needs verifiable data and understanding and context, right? And then that drives the lending decision. So in itself, right, you do see a way where AI can help quantify risk, but there is always a human angle that needs to be involved.
Right. All right, we'll keep tracking this, and hopefully the MSMEs and small businesses, get more attention, when it comes to funding. Thank you so much for helping us unpack this. Oluwatoyin Olaoye is the Chief Risk Officer at Vendor Credits. Thank you for coming on today.
Thank you, Ladi. Thank you for having me.